A lot of people are interested in getting into covered calls and covered call writing, but they don't know quite how to go about it. In this video, I'm going to show you covered call examples. I might even show you 2 covered call examples so that you can see how it's done and see how easy it is to start making cash flow by using covered calls. Stay tuned. Okay, so this is my Mosaic trading screen. I'm on a program called Interactive Brokers, and they're a great firm, one of the platforms that I use. We also use TD Ameritrade. Their Thinkorswim platform is great. E-Trade's great. Schwab is great. There's a lot of different platforms that are good. They all pretty much do the same thing now. I just like the way I have mine laid out. So I'm going to show you how to buy a covered call. Just kind of do a covered call example. Why don't we do it on Roku? So Roku's up 5% for the day. Let's take a look at Roku, and you can see it's at $236.25, up $11 for the day, and it's got some pretty good volatility. It's got an implied volatility of 57%. So I'm going to bring in my options chain. Okay, here's my options chain, and I'm showing the options out 22 days. So this is about a 3-week long trade, and we can see that if we go at the money here, we will be picking up the 235s. The stock is at 236, so it's right at the money, and we're going to be picking up about $13.70, maybe a little bit more, somewhere in between the bid and the ask. So let's first of all go ahead and buy our Roku. So I'm going to right mouse click on Roku. I'm going to buy. Let's buy 300 shares of Roku. We're going to go at the market, or we're going to go at the limit at the market, basically the market price. We could just do a market price too. That's probably easier. That way we don't have to mess around if it starts to move on us. We're not going to quibble about pennies here.
Order partially filled.
And now you can see we have the 100 shares of Roku in the account right there. Now we have our options chain, and you can see we can go at the money, and we get, at the money, the stock is right now at 236.32. At the money is 235, and so we could easily just go ahead and sell those at the money. They expire in 22 days, and we pick up $13.70 of premium, right? But maybe we think that we want to be a little safer, right? Maybe the stock could drop 10. I mean, it's up 11 today. Maybe it drops 10 because we have a little market correction. So why don't we pick up a little cushion and we go down to the 225s? Now the 225s are going to give us $19.20 of cushion. So that one looks to me like the one we want to do. So let's go ahead and sell. We're going to sell to open. So we bought 300 shares of Roku. So we're going to go ahead and sell. Three contracts. Remember, a contract is 100 shares basically. So we're going to do 3 contracts. That's 300 shares. And we're going to sell right here at the bid, because that's the price we sell at, right? We don't get the higher price. We sell, it's the wholesale price, right? So we're going to take that. So we're going to sell that.
Order filled.
And now we're just going to reduce these. And now you can see in the account, I have 300 shares of Roku, and I have 3 contracts against it for the 225 calls, right? And so those should move kind of in tandem with each other. Now, the way this looks is if the stock stays above 225, and remember it's at 236 today, if it stays above 225, we basically make that $7 in time premium for holding it 3 weeks, right? Pretty good. So all you do is you click on the buy, you buy it, and then you click on the 3 contracts on the option chain and you sell it, and you're done. And now you're in a position that's a covered call on Roku. Did you get that? Let me show you another one. Let's say that we want to add some Alibaba. That one's moving today. But Alibaba is something that I used to make a lot of money on. So I'm just going to right click on it. I'm going to buy. I'm just going to do 200 shares. Okay, 200 shares. We're going to go at the limit. Let's go at the market. We're going to submit. You see it's $24,000 trade. Transmit.
Partially filled.
Now we're filled. It's starting to drop a little bit, not too much, but it's about 123.82. So we're just going to right click on that. It's going to bring up the January 21st. They go out 22 days. And I'm going to go, I like to go in the money. I never want to go out of the money when I'm selling calls. This is just the way I trade. I'm a conservative trader. So I'm going to go to the 123s and I'm going to pick up about $7.15 of cushion, right? Of premium. So we're going to click sell, 2 contracts at 720.
Order filled.
And we have a fill. So now if we take a look, we've got 200 shares of Alibaba and we have 2 contracts short. So that's the writing of the covered call. Just trying to give you a covered call example here of Alibaba right there. And now we are covered. And as long as the stock stays above 123, we get the maximum amount from the sale. So those are 2 covered call examples for you to look at. We did a covered call example in Roku, and we did a covered call example in Alibaba. So I hope that helps you. So what'd you think? Pretty easy, right? I mean, you just basically click the mouse. It's not really hard work. The question is having a strategy around what happens after you get into a covered call, right? It's not just any stock that you should use to do covered calls. It's got to be the right stock. It's got to be at the right spot on the chart, and it's got to be in the right market. And then you've got to manage the whole situation, right? You can't just pick any stock. I know so many people that pick cheap stocks or stocks that seem like they have a lot of money that they can make and income on it, and then the stock goes down a lot and they get crushed in covered calls. That's why sometimes covered calls gets a bad reputation, because people just do the wrong thing. There's a way to do it, and there's a way to have a system around it, and we have a strategy for that. So if you're interested in getting involved in doing covered calls and you want to do them right, we have a program called the Cash Flow Machine. And there's probably a link at the bottom of this video or something you can click at the bottom to get involved with us, or at least to find out some more. But if you're going to do covered calls, make sure you know what you're doing and have a strategy around what happens after you get into stock. Thanks for watching. Hey, it's Mark Yagi, and I want to tell you about our Cash Flow Machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for about 2 to 4% a month of income and growth in your portfolio. We have courses that teach you how to do this for yourself or inside a mastermind community. And the best part is that it takes just 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA account from $111,000 to over $500,000 in just 19 months without huge risk. Now, I'm not telling you this to brag, only so that you can do it too. If you want to get involved in this program, just click on the link below for the Cash Flow Machine, and you can start right away.